Hey, welcome back to Channel S Quick Invest. Everyone knows the 4% rule. 1 million Singapore dollars means you can spend 40,000 Singapore dollars a year, or about 3,333 Singapore dollars per month. That's a solid, comfortable retirement in Singapore. But here's the classic retirement flaw. If you're constantly selling your main growth investments to get that 40,000 Singapore dollars, you are exposed to sequence of returns risk, selling low during a market crash. The smarter, safer way to retire is to flip your portfolio to create an income floor. Part 1. The Retirement Allocation Strategy. For a retiree, growth is secondary to safety and income stability. We adopt a defensive allocation that prioritizes cash flow, 60% income assets, high-quality dividend stocks, REITs, high-grade bonds, 30% growth assets, broad market index funds, which stay invested and untouched. 10% cash, liquidity, your 1 to 2 year emergency buffer. Part 2. 1 million Singapore dollars for a comfortable lifestyle. Let's look at the 1 million Singapore dollars portfolio. Your target spending of 3,333 Singapore dollars per month provides a comfortable retirement. This lifestyle is based on local living, assuming a paid-off home. Here's how that monthly 3,333 Singapore dollars budget is spent. Food, hawker focus, 800 Singapore dollars, transport, MRT, bus, 200 Singapore dollars, utilities and bills 250 Singapore dollars, basic healthcare, insurance 400 Singapore dollars, discretionary spending, travel, hobbies, 1,683 Singapore dollars. Total monthly expense 3,333 Singapore dollars. Now, let's see how our defensive allocation protects this. Assuming your 60% income assets generate a sustainable 4% dividend yield, total annual spending 40,000 Singapore dollars, passive income from dividends 24,000 Singapore dollars. Cash drawdown needed to sell $40,000 minus $24,000 equals $16,000. Effective capital withdrawal $16,000, $1 million, equals 1.6%. The difference is staggering. You are fulfilling the 40,000 Singapore dollars spending goal, but you are only forced to sell capital at a rate of 1.6%. Your dividends cover more than half the bill, making your comfortable retirement incredibly secure. Part 3. 3 million Singapore dollars for an affluent lifestyle. Now, for the inspiring goal, the 3 million Singapore dollars affluent lifestyle, targeting 10,000 Singapore dollars per month. This is the premium retirement life. Affluent, comfortable, and without compromise. Here's where the extra money goes, showing the complete shift in lifestyle. Food and dining, fine dining, 2,500 Singapore dollars, transport, car ownership, 1,500 Singapore dollars, utilities, bills and staff, domestic help, 1,500 Singapore dollars, premium healthcare and wellness 1,000 Singapore dollars, discretionary spending, luxury travel, clubs, 3,500 Singapore dollars. Total monthly expense 10,000 Singapore dollars. Let's apply our defensive model to this high target. Total annual spending 120,000 Singapore dollars. Passive income from dividends 1.8 million Singapore dollars times 4.0% equals 72,000 Singapore dollars. Even at this high spending level, your 72,000 Singapore dollars in passive, reliable dividend income covers 60% of your entire affluent budget. You've built a financial fortress. If the market crashes, you simply stop selling capital and still have 72,000 Singapore dollars of income flowing in, enough to easily cover the core expenses of a typical retirement. Conclusion: dividends are loss prevention. The lesson is simple. You don't just accumulate capital, you structure it for income. By prioritizing a 60% income, 30% growth allocation in retirement, you transition from being a capital seller exposed to market risk, to an income collector protected by a dividend floor. This is how you ensure your wealth lasts, no matter which amazing retirement lifestyle you choose. If you find above information useful for your retirement, like and subscribe to my channel so YouTube will recommend my videos to you and more Singaporeans. Disclaimer: information in this video is provided for educational purpose only and should not be considered as financial advice. Always do your due diligence or so speak to licensed financial advisor before making investment decisions. Thanks for watching, and see you in the next one.